and we'll kick off the webinar right now because we're recording. And let's see. All right. Hey, everybody. Welcome to the Crypto Fireside Chat with my good friend and colleague, Jeff Nabers. Welcome, everybody. We're really glad you're here because, as you know, nothing is going on in the Bitcoin world this week, right? It's totally dead. There's nothing to talk about related to crypto. If you guys hear me, see me, and Jeff, can you say hi just to make sure that everybody can hear and see you okay?
Hi, thanks for having me.
All right, guys, in the Q&A right now, just tell us hello and let us know, what are your thoughts on what's been going on in the crypto world this week? The world is a buzz right now. And I mean, not just the investor world, the world in general, with over 40% of Americans, and that's just United States of America only, right? We're not talking the rest of the world, are now crypto holders. We have a worldwide conversation happening right now because of what's been going on. And we want to know, what are you guys thinking about? So some of the highlights that have happened, right? A lot of people starting to wonder that now there's this term, the Bitcoin bruise. You know, people are wondering and scared, is the Bitcoin bubble popping? Is Tesla putting the brakes on Bitcoin because of some other reason behind the reason? And what almost everybody is getting wrong about DeFi. So we're talking tokens like Ethereum and Aave and so forth. And I know for myself, you know, after you're taking a look at what happened with Aave and Ethereum, and there was one other coin I got in, and then you started going bam, bam, bam. As soon as Monday opened up, I was like, what? Actually, not opened up. It was happening all the time, but it was really amazing to see what's happening. So today we want to help kind of cut through the noise, cut through the clutter, and really help you, as you know, our community here of insurance and financial advisors, make sense of it all. So that's why we love having Jeff here. Just a little bit about Jeff, so you know where we're getting, you know, our expertise from here at Advisorist. Jeff retired in his 20s after selling his mortgage and real estate businesses and shorting the stock market before the 2008 bubble hit. So after studying economics and trends, he began investing in Bitcoin and tech stocks in 2013. He's the founder of one of the first crypto hedge funds ever in 2017. And his wealth management firm specializes in combining traded securities, crypto, physical precious metals, and private investments into an integrated wealth management strategy. He's also an RIA. So that's why our community of advisors loves to come to these crypto chats, because this is a perspective of advisor to advisor. And here you're going to learn what to say to your clients, how to make sense of it for yourself, how to profit from yourself, and also what it means for the rest of you. So I want to read Jeff, if it's cool with you, I want to just kind of give a little shout out to some of our members. Here we got Robert, who says, hello, strap in for the crypto ride. Yeah, absolutely. Moisha's like, what a week. Carl's belief is China, you know, they have a strong influence on the crypto market, he's saying. And Russ is like, my thoughts are, who can make sense of this chaos? Checking in from Vancouver. Welcome to you, Ross. Aaron's like, well, I wanted to buy lower. Well, now you have the opportunity here. And Tony's like, I hope to be solidified in my opinion that this is a buying opportunity. So great stuff. Well, let's dive in, Jeff. What is going on from your perspective?
Yeah, very eventful week. It's been an eventful month, actually. This is going to sound crazy, actually, but this is very typical crypto market activity. What happens is in a bear market, all the normal people have gone back to their normal lives and assumed that Bitcoin and crypto are dead. And then when it pops back out and starts making headlines of how it continues to be the best performing asset class in all of known history, once again, then people go, oh, it's not dead. And then they start seeing that, they start paying attention to it, it gets back in the headlines, and then a whole new wave of new people come into crypto. Now, once they come into crypto, that's when things get extra volatile, because you've got new people, they're very susceptible to myths and misconceptions and scam artists, and crypto is still a free market. So compared to the regulated markets that we might be more used to recently, it's the Wild West. So you get out there in the Wild West and there's some wild things that go on. So what we've seen is that a lot of institutional investment and crypto adoption began to happen in 2020 and into 2021. Tesla was one of those stories, which we'll talk about in a moment. Around March, retail, in other words, individual investors, really started to get in too. And that's when you have the seeds of this kind of volatility. When retail gets in, what happens is they usually are, it's really just a lot of people chasing returns, like, hey, this is a great return, let me just buy some of it. And there's a lot of things you have to learn about crypto in order to have a solid and clear strategy and not fall victim to, some of the pitfalls that you can fall victim to. Unfortunately, most people don't do that. They just get in there. They don't have a solid strategy. Without the solid strategy, the traders can basically take them to the cleaners and take a lot of their money. So a lot of what we've seen over the past few weeks is partially the newcomers losing a lot of money, the traders making a lot of money, and the long-term holders who have a strong strategy like myself picking up some Bitcoin off of the people who are selling it and buying this buying opportunity. So that's kind of in a nutshell what we've seen. I can share my screen right quick if you want the visual oomph to it. Let's see, share screen, and there it is. All right, so this is the Bitcoin chart we have right now. So if we kind of zoom out just a little bit on here, then what we're going to see is that if we want to measure it from top to bottom of this sell-off, in only 36 days, Bitcoin price went down 53%. If you just want to look at kind of this latter part of it, we've got in just 11 of those days, 49% of it. So that's pretty interesting. And then you kind of, you look at a chart like this and you go ups and downs, down 50% in the last 10 days. Why are we even talking about this asset class? This just sounds like a casino, right? So, that might be a good place to start. And then we can get into, is this a bubble? Is there a bubble coming? What did the bubble pop? What's going on with Tesla? And what everybody's getting wrong with DeFi. I think before we get into some of those points, we need to get the big picture. And before we get the big picture, like this chart that we see on the screen, this is in everybody's mind. And so the first thing we need to do is we need to get you a better chart. Okay, the chart that you would see on CNBC, the chart that you would see on most apps, even when you just open this app, which right now you can see I'm on a site called tradingview.com. Even on tradingview.com, if you look up the Bitcoin price, it's BTC/USD. If you click that, you're going to be looking at this, and it's just going to be a bunch of colors and stuff moving around, and it just looks like a crashing asset. Okay, the reason, from a price perspective, the reason why Bitcoin continues to be as attractive today as ever is revealed when you look at the best chart to look at. So there's two things you need to do to look at the best chart. Number one, you need to go to the 1 week candle. So every one of these things that's red or green, it's called a candle. And the little thing you see coming off the top and or the bottom is a wick. And most charts default to like 1 hour, which means every candle is an hour, or some even go like 1 minute. So then you're just watching every minute. Some people even go 1 second. Oh, they want you to upgrade for that. Or 30 seconds, same thing there. So then like whatever you're looking at is just that length of time. So the first thing we want to do, we want to go to 1 week candles. And then the chart looks like this. It still looks like a bubble, and it still looks like it might be popping, right? This chart is actually inaccurate. It's inaccurate because Bitcoin is having exponential price movements, but we have a linear chart that doesn't show them. So we have to click this button down here that says toggle log scale. And when we click that, have a look at that. Does that look like a bubble? This It tells a totally different story. This tells a story of an asset that has its ups and downs, but what is the overall trajectory here? We don't have to be very advanced chartists, do we, to say what is the overall trajectory here? Now, on a logarithmic chart, if something is even going up at all, that means that it's going up exponentially, more than you would be used to assets going up. So that's kind of the first thing we want to do here. And we want to basically say, if we're zoomed in to just the last couple of weeks, then we're going to go, oh my goodness, Bitcoin is down 30%. But as soon as you go to 1 week candle, look how little that dip is. Can you see that dip? You can barely even see it. It doesn't even really work. You almost have to paint it differently. We're literally talking about that on an asset class that has gone up that much. So if it goes up that much and then it goes down that much, how many of you would still be pretty happy with the overall trajectory?
Put happy in the Q&A if you'd be happy if that was overall what you get, what would be going on in your portfolio right now.
Yeah, and for assets in your portfolio, are you okay with them going down that much if they went up this much first? Yes.
We know Aaron would be.
Yeah, Aaron is happy with it. So that's kind of the first thing here, and that's kind of the price perspective. But really, what we want to zoom out, I think, here and talk about first is like, what the heck is Bitcoin? You know, like for those of you who are here, and this is your first presentation with me, what is Bitcoin from your perspective? What have you been told, or what do you think Bitcoin is? Put that in the Q&A if you would.
Yeah, and I appreciate that question. While you guys kind of get typing, and by the way, this is not a test. This is really about helping all advisors catch up to what's going on. So what do you guys think Bitcoin is? And this is a really important question, because you know what? If your clients have not asked this of you yet, they will. And it's one of those, you know, you have the FAQs in your career as an advisor, but then you have the SAQs. FAQs are like the frequently asked questions, right? I think the frequently asked question you might be getting as an advisor is, do I need to get into Bitcoin, right? Your clients are calling you. But there's also another layer, which shows deeper level of thought from the advisor, and that's called the SAQs. Should be asked questions, right? What are the should asked questions that your clients should be asking you, but they don't even know. They don't know what they don't know. So that's why we're asking these questions and getting you guys to kind of, you know, share your thoughts, because by doing so, this will cement it really in your mind and be able to be that authoritative advisor that is really at the cutting edge of giving your clients the advice that they need. So Jeff, you want to look at some of the comments that are coming in here?
Yeah, that's the SAQ thing is huge. There's a interesting quote from Henry Ford. He said, if I would have asked people what they wanted, they would have said faster horses. Right? So sometimes when you're a business person, you have to figure out what people want and need that they don't even know to ask about yet. We don't really have that much of that. We have less of that today because you probably have, everybody's talking about crypto. Okay, so yeah, it depends on when I bought. Mike says it's a store of value. David says it's an internet protocol. Lucy says it's a digital currency. So does Esther. Janet says it's like buying expensive art that appreciates in value over time. Amazing place to park and grow my funds. Digital hard money, says Kevin. Okay, so all of these answers are to a degree correct, but they're all also kind of in a different, some of them go in different directions. So what I want to start out with is let's just lay the foundation here today for your knowledge, and let's get an understanding of what is crypto and what are the different main elements of crypto. So first off, you essentially have to understand, before we even start, we have to acknowledge the elephant in the room. There are scams in crypto. There are speculative mania assets in crypto. Let's just call that whole category Beanie Babies, right? We all remember Beanie Babies, or we all have heard Bitcoin or crypto get compared to tulips. Listen, comparing them to tulips, the tulip mania in the Netherlands, or Beanie Babies is a good comparison for that part of the category. And in terms of all crypto assets, you have to know up front, 95% are Beanie Babies. Okay, so 95% of crypto are Beanie Babies, which means maybe you can make some money, but there's really nothing of real value to anybody here. You know, nobody drives their Beanie Baby to work or feeds their family with a Beanie Baby. A Beanie Baby is just a little thing that has nothing but collector's value. That's a bunch of crypto. We're really not going to talk about that because that's basically just like gambling with your future. What we're going to really talk about today is investing. And when it comes to investing, there's essentially two categories that you need to know about. One is digital hard money, as Kevin was saying earlier, digital hard money. And we're going to get into that. The other is DeFi, which is decentralized finance. And a lot of times people talk about like Bitcoin versus Ethereum, or like Bitcoin versus Cosmos, or one of these, all of these other assets. The first thing you have to understand is what is the digital hard money category. The digital hard money category it's essentially, think of it as a contest. The contest for digital hard money is over. Bitcoin has won. Bitcoin is one digital hard money. Now, if you understand what digital hard money is, then you'll know that DeFi is something totally separate. So what is digital hard money? Well, before anything was digital, we have always had money as humans, and we've had hard money and we've had easy money. The reason that we think about things in terms of hard money and easy money is that we have a cycle where societies and civilizations just go through a cycle, almost like a pendulum swinging between hard money and easy money, and hard money and easy money, okay? And hard money is any kind of money that is hard to create, right? So if I just say, let's start our own society on an island, let's use sand as money. Well, sand is all over the place. All you have to just do is just walk right out to the beach and there's unlimited sand virtually. So like if sand is money, then it's very easy to make more money. So if we're all in the middle of the island trading, exchanging with each other, creating our own little economy, it's very easy to just walk over to the beach and just pick money up off the ground. All right, so when there's easy money, the easy money doesn't really have any value because it doesn't really have any scarcity, okay? Then what you find is civilization really kickstarted when hard money was developed. And hard money is something that is hard to create more of. So we experimented with lots of things: cattle, wampums, beads, stones, and ultimately the first real scalable, successful societal hard money was gold. And the reason that gold was hard money, and the reason why it was used as money, was because it's very hard to mine gold out of the ground. It takes a lot of effort. So in a way, if a whole bunch of people put together an effort to mine a lot of gold out of the ground, then they're going to basically translate all of that work into money. They're translating like physical energy into money. It's very hard to translate more physical energy into more gold because there's only so much gold. Okay, so what hard money has is hard money has scarcity, and that enables it to store and capture value. Now, throughout society, I know half of you are going like, I didn't come here for a history lesson. If you get this foundation right, then you can really start to cut through a lot of the confusion out there in the marketplace. So hard money captures and stores value because of its scarcity. So gold has been hard money, but then you very often, very frequently throughout society, you have this type of thing happens where a king all of a sudden says, I declare this other thing money, and you're going to get your head cut off if you don't use it. So then everybody starts to go and use that money because the king or the ruler says so. And then what happens once they get people using, and oftentimes it'll just be like a piece of paper or some sort of type of metal that's really easy to get more of. And then when they can create more money, that basically gives unlimited like money printing capability to that king. that gives unlimited wealth to that king, and everyone else has their money going down in value. So let's just wrap this little history 101 lesson up, and suffice it to say, every easy money has failed. And easy monies are also called fiat money or fiat currency. Every time that fiat money fails, almost every time, the society returns to hard money. So you basically have this cycle between going back to easy money, it fails, they go back to hard money as gold. Going to fiat money, paper currency fails, go back to gold as money. And the reason why this happens is very simple. If you can print more, the value goes down. And if somebody can print it, they do print it, the value does go down, and then eventually they print so much that nobody wants to use it anymore. So where do we sit in all of this? Well, first off, let me share my screen again.
That's what's happened in countries with hyperinflation, right? They just kept printing, and all of a sudden, like some of the old-timey pictures where somebody had a barrel of dollars. This is what happened, in Europe at one point, and they were bringing all that in to buy one loaf of bread, and it just devalued everything. So it's kind of interesting to see.
And you don't even have to go to the old-timey pictures. You can go to pictures snapped on the iPhone in Venezuela in 2017. You can go to pictures snapped on the iPhone just a few years ago in Argentina. You can go back to pictures snapped in 2006 in Argentina. You can go back basically to every Eastern European country, just go back a few decades. You can even go to a couple of points in American history when there was even hyperinflation. So hyperinflation is not a rare economic event. Our economic history is sprinkled with hyperinflations. And where we stand in this, which is really important to understand, is the dollar currently is a fiat money. The dollar currently is the type of money that has a historical failure rate of 100%. So we need to consider that that could continue and that the dollar itself might actually go into a hyperinflation. It might actually go into a currency crisis, and currency crises happen from money printing. So let's talk about money printing. This chart that you should be able to see on the screen is the money supply, which as soon as COVID hit, look what happened to it. It's the blue line. Here's the money supply from about 1970 or so. And then after the 2008 crisis, the M1 money supply started going up quite a bit. COVID hit and it turned into a hockey stick. And I think the Federal Reserve started to get a little bit embarrassed and they immediately discontinued publishing the money supply. So literally right now we have a type of money that historically has failed every time too much of it gets printed, and they just started printing too much of it. So this is a lot of the reason why there's so much chaos in the markets, not just the crypto markets, is we have the early rumblings of some serious inflation problems. And when you have, there's an even bigger cycle than just the fiat easy money, hard money cycle. And that is the global reserve currency cycle, because not only is the dollar a fiat money with a historical failure rate of 100%, but it's also the global reserve currency, which historically only lasts about 50 or 60 years. Okay, so we've actually had, so Portugal used to have the world reserve currency. Then it was Spain. Then it was the Netherlands. Then it was France. Then it was Britain. Then it was the USA. So like if we want to zoom out and get historical context here, the Spanish currency was the global reserve currency for longer than the US currency has been. So we don't have any guaranteed, like baked in claim to have the world's reserve currency here. We're just the 1, 2, 3, 4, 5, 6th country to have the baton. And we're coming towards the, like terminal length that a global reserve currency basically stays the same. So in the grand scheme of things, we're in the middle of a seismic shift where the next row on this chart could turn out to be Bitcoin. And instead of it being a country, it's the first crypto network. And if this happens, we can expect Bitcoin to have a network effect or price appreciation that could potentially put it well over $1 million. And some people would estimate even $5 to $10 million per Bitcoin. So we just want to start out and say, this is why Bitcoin is a big deal. It's not a big deal because it's Beanie Babies. It's not Beanie Babies. It's a big deal because it is currently the most likely positioned asset to inherit the baton of the global reserve currency. And if it does, every Bitcoin, which you can currently buy for about $40,000, may become worth $1 million, $5 million, $10 million. So if we want to answer the question, is it a bubble? Is it over? Is it dead? I strongly believe no. And so far, all of my past strong beliefs around this asset class has come true. So let's just take a pause here and just make sure, let's get everybody on board before we go to our next stop here. Okay, the first stop is we've got to understand Bitcoin is digital hard money. Digital hard money rules the economic history, right? The economic history is the United States could not have become a wealthy country without a hard money platform of gold. The hard money platform of the future is most likely going to go to digital hard money, and there's only one digital hard money. It's the king of it. That's Bitcoin. No other cryptocurrency has tried to do this and not failed. Bitcoin has won. Bitcoin has won, and we still have the road from 40,000 to potentially over 1 million.
Jeff, if you're cool, I'd like to bring up Chris Allman. He's got a really good question. I think reflects a lot that I think will put a nice point to it. And then I want to share an image and a meme with everybody related to holding Bitcoin. So once we're all on the same page, but let's go to Chris. Chris, I'm going to take you off of mute. I thought this is a very thoughtful question. Chris Allman, can you go ahead and just say hello and take yourself off mute? And
Yeah, no, happy to. Thanks.
Hey, good to have you, Chris. Welcome.
Thanks, Jeff. Yeah, so the question that I've posed with other advisors that I work with and some of our partners that we talk to about Bitcoin being a digital gold, what makes it essentially in the position to replace gold? Because I think that's kind of one of those things that I hear a lot, and it's truthfully I don't have an answer for that. Why it would be more of a a digital, I guess, a hard asset than gold itself. What makes it take it over?
Great question. Thanks, Chris. So there's a couple of reasons. Number one, with gold, if somebody says, hey, we have gold in the vault, you have to trust them. And if you trust them and they lied to you, then they basically just took all of the money or value that you gave them to store gold in the vault. So you could basically say gold is challenging to audit. And even at the end of the audit, you could still have shenanigans and the auditors could get in on the scam. Interestingly, you have actually even had in the last 20 years, central banks scam each other where one central bank sent over a shipment of gold to another central bank and said, here's your gold. And when they drilled into it, they found out it was tungsten and worthless. So they got caught. So even at the highest levels of our society, which I would even put central banks above governments in terms of their power and influence, the very top of the pyramid, you have one organization scamming another organization. So it's hard to tell if gold is real. You have to do laboratory testing. It's hard to tell if gold is really in the vaults that they say they're in. You have to do audits and ultimately trust the auditors. And then the really big one is it's very hard and expensive to move gold. When the Bundesbank in Germany said to the New York Fed, we want to repatriate our gold, at first the New York Fed said no. So immediately that's a red flag that's maybe the New York Fed doesn't have the gold. Eventually, the German Bundesbank said, we really need that gold, give it. And eventually the Fed said, okay, and they gave it to him over a period of many, many months. I think it was 18 months. It was they had to go into the couch cushions to round up the gold that they said that they had so they could give it back. And if there's $1 billion, so if there's a $100,000 worth of gold, you can fit that in a FedEx envelope. Now, you probably don't want to use FedEx, but it's not going to be that costly to move, and you can move a little bit of gold from one side of the world to the other for probably thousands of dollars. Okay. But if you want to move billions of dollars worth of gold, you cannot do that for thousands of dollars. So when it gets to scalability, gold gets bulkier and bulkier and heavier. And then the next thing you know is you need these huge armored trucks, you need these big airplanes, you need armed guards, you need logistics thing. It turns into a James Bond movie real quick, or they try to avoid it turning into a movie in terms of a heist. And so what ends up happening is it can take months to do a transaction to transfer large amounts of gold from one place to another. And at the end of the day, a heist could still steal it. With Bitcoin, whether you're moving $50 worth of value or $50 billion worth of value, the transaction is going to settle in 10 minutes and the price is going to be the same for either. So in particular, what Bitcoin promises to be is what's called a settlement layer, or layer one of a new financial system. I need to point the camera down a little bit. So Bitcoin is layer one of a digital hard money system. So it is an alternative to the Federal Reserve. When you do a Bitcoin transaction, it's not like swiping a Visa card at Starbucks. It's like being a bank and having an account at the Fed and settling a wire in the FedWire system. And even just there, the FedWire system does not settle transactions in 10 minutes. And Bitcoin transactions are considered technologically irreversible and completely final after 6 confirmations, which is 60 minutes. So Bitcoin, without any CEO that could potentially be corrupt, without any headquarters that could potentially be nuked, without any of those vulnerabilities, with just a piece of software that has a better uptime than the White House or the Pentagon computer systems, Bitcoin can actually settle any amount of a transaction with absolute finality without having to trust any human beings for only 60 minutes. And there's a marketplace for the fees, but usually it only costs $10 or $20. And if all of a sudden you're a political dissident or you're fleeing a country where you're being oppressed, there's nobody who can turn your transaction off. So it's a real new financial system that is capped at only 21 million. We're talking about scarcity. That's what makes it hard. It's hard or basically impossible to make more Bitcoin. Now, let's talk about that for a second too. So first off, gold is not digital. So that makes gold very difficult and expensive to transact. It's very hard and expensive to move gold. We've just talked about that. Gold is also not that hard compared to Bitcoin because the asteroids that are floating around the Earth have more gold than the Earth does. And as soon as SpaceX starts getting up into space, they're going to be bringing gold back. And then all of a sudden, gold is going to be a lot more like the sand on the beach in my example earlier. Now, that might be decades away, but Bitcoin will not even have its full 21 million until the year 2140. So it's the hardest asset, the hardest money we've ever seen. And in terms of being money, it has its own payment rails that we just talked about. So that's just a little bit about Bitcoin being superior to gold for a digital era. It's auditable, it's harder, it's digital, and it has its own payment rails where gold has to rely on physical infrastructure that's expensive and error prone.
Thank you for that explanation. I just wanted to show this. So this is a news story from 2013. This is a family, the Altman family, who invested $100,000 in Beanie Babies as an investment. And I gotta show. I mean, I have a lot of pity for the guy. He even went out and got a T-shirt printed that says "Bankrupt by Beanies." And to Jeff's earlier point about most of the coins out there being, Beanie Babies, I thought this was a good reminder of the past because most of us saw what happened during the Beanie Baby, too many B's, Beanie Baby bubble. But here's another one that has to do with the buy and hold. So maybe some of you have seen this meme go around, which is when Elon, tweeted this out. Tesla has, and then diamond hands. So you may have seen that emoji. There's now a meme with it that's going around, or a meme, depending on how you call it. It looks like this, where you have this guy who's holding diamond hands. So tell us a little bit about, Jeff, about why the hardcore Bitcoin community has made this a thing now, and why this expression of diamond hands is just growing in notoriety, and what it has to do with this whole burst that people think is going on.
Yeah, so it all starts with the fact that new technologies are hard to understand. So Bitcoin is a new technology. It's hard to understand. This is like the internet, like in 1999, that guy who went bankrupt by Beanie Babies, there's all kinds of other people probably wearing shirts that say bankrupt by pets.com. Well, why is it when it comes to the internet? Well, it's because you could have invested in pets.com in 1999, and you could have invested in amazon.com in 1999. It was very difficult to the average person to know which one was going to become a $1 trillion market cap global behemoth and which one was going to go bankrupt in the next 24 months, right? So why is that hard? It's because it's new technology. It's not well understood just yet. Bitcoin is not well understood just yet. And so what happens in the Bitcoin and crypto world is when new people come in, then the whole crypto ecosystem becomes susceptible to something called FUD, F-U-D. FUD stands for fear, uncertainty, and doubt. And so FUD happens when there are FUD stories. And what's interesting is that FUD stories are almost always based on a myth. It goes something like this: Bitcoin is bad for the environment. Or if Bitcoin grows, it's going to destroy the environment. Or the government is going to shut down Bitcoin. Or China is going to ban Bitcoin. Or Bitcoin can't do as many transactions as Visa, so everyone is going to leave Bitcoin and go to a different blockchain. And there's about half a dozen different stories like this. And they all have different flavors, but the main ones are the environment, government bans, and there's a better digital hard money. Those are the big three. And so the diamond hands, in the Bitcoin community, we say there's people with strong hands and people with weak hands. Strong hands means by the time you get the Bitcoin in your hands are going to be strong and hold on to them because you've educated yourself to be resistant to the FUD. So when a mythological, misconceived story comes out claiming that Bitcoin is going to be dead for one of these reasons, your hands are going to hold on to the Bitcoin because you know it's nonsense. You know better. You know more than these CNBC commentators and Reddit posters and your cousin Larry on Facebook. Okay. Everybody else who has not done the research and they see the price going up, they're like, no time for research, put the money in, while you're wearing the bankrupt by beanies t-shirt, like mortgage the house, max out the credit cards, put it all in Dogecoin or whatever. By the time somebody is doing that and they're just frantically chasing the returns rather than doing the research as an investor, they end up with weak hands, meaning that the first sign of FUD, the first negative news story, if they didn't research the facts to get into their crypto position, then they're not going to research the facts before they get out of their crypto position. So the hands are very weak. They're too weak to hold on to the Bitcoin. As soon as the FUD comes, they're going to sell the Bitcoin back over to the person with the strong hands. And so over the past few months, the Bitcoin community started calling strong hands diamond hands, right? Because diamonds are like that hardest material. And I can't remember what it is. I think it's lettuce hands or something like that, or banana hand. I can't remember. There's weak hands, but the strongest hands there are diamond hands. And Tesla bought Bitcoin. Elon bought Bitcoin. They announced it. He said, I'm really bullish on cryptocurrencies. But then he came out and said some FUD himself, which that's its own topic. But for one reason or another, which nobody really fully knows other than maybe Elon himself, he said some FUD himself. And then people started speculating, did Tesla sell their Bitcoin too, or are they going to? And Tesla's cryptic tweet that most people don't know how to decrypt is essentially saying Tesla did not sell their Bitcoin and Tesla will not sell their Bitcoin. Tesla has diamond hands. So if I have any kind of a positive impact here in our community today, it's that your hands are going to start looking like diamonds too. So Bitcoin is digital hard money. It has already won the category. Is it possible, Jeff, that some other crypto could come and oust Bitcoin from the king spot of the digital hard money category? Yes, but it's unlikely. It's probably less than 1% chance. That's because Bitcoin has had a 10-year track record already of not being able to be shut down, not being able to be stopped by governments, not having some sort of flaw where it, freezes up or it doesn't process transactions. Bitcoin is the most reliable computer network on the planet. So what better network to send your money and your most important transactions or build your financial system on than the strongest and most reliable network? Now, somebody else can come along and write what's called a white paper and theoretically conceptualize a new cryptocurrency like, oh, this is so much better than Bitcoin for these reasons, but it doesn't have the track record. Just like somebody could go, I found this new shiny rock. I should get all the central banks to hold it in their vaults. Well, gold has a 10,000-year track record. Bitcoin has a 10-year track record. And in the digital era, a 10-year track record is basically the equivalent of a 10,000-year track record. So it's unlikely to be ousted. Now, the next category you need to understand is it's another financial stack, which, by the way, your money right now is on a financial stack. Layer 1 is at the Fed. And if you go to Starbucks over here and you buy that proverbial coffee with your Visa, the Visa network is on the top of the stack. So this is how financial systems are constructed. You have a base layer where all of the other transactions from the other layers, they eventually settle down to the base layer. So that coffee shop, they have a Visa merchant account, and then that Visa merchant account goes and settles down into the bank account, and that bank account holds the dollars, and it might actually eventually get a wire or something down on that base layer, all settles down to the Federal Reserve as the central bank. So Bitcoin is the central bank of the future. The Federal Reserve is the central bank of the industrial era, the late industrial era. Over here in DeFi, what we're looking at is more of an additional financial system that goes beyond money and goes into other financial instruments. You could think of DeFi as the next stock market. And right now, the dominant base layer of layer 1 is Ethereum. And it has a coin that you can hold called ETH. So let's just step back, grab our pens and papers, and see if we can just get a little bit of a takeaway. Okay, owning Bitcoin is like owning a piece of tomorrow's central bank. It's almost like if there was a land that you knew everyone was going to have to migrate to, and you want to buy the land before there are roads leading to it. You want to buy the land before there's plumbing. You want to buy the land before the utilities are brought in. You definitely want to own the land before all the skyscrapers are built. And then as they build the roads in, a lot of people wonder, like, when do I sell Bitcoin? Well, I don't know. Like, if you own the land and everybody starts moving into it, when do you want to sell the land? Like, oh my gosh, we have utilities here. Well, now the land is more valuable. Do you want to sell it now? Well, the builders haven't even built the buildings yet. Oh my gosh, they built the first skyscraper, and the skyscraper has to pay rent to you as a landowner. Great, now it's turning into a cash flow asset. In other words, a real estate mogul wants to own real estate forever and pass it down as a generational asset. And if you're going to be a digital central bank mogul along with Jeremiah and I, then what you want to do is you want to grab your little piece of the Bitcoin digital hard money network and say, now what I'm owning is this is title to my little slice of the new financial system. I own the next Fed. DeFi is like being able to say, I own the next stock market, where DeFi has this Ethereum network, and they're able to process on this layer 1 something called a smart contract. And this is just the technological building blocks that other layers can build on top of. And some of these other layers will do things like automated market making, or essentially automated asset management. One example of this is like what Jeremiah mentioned earlier, which is Aave. I started talking about Aave when it was, I don't remember the prices. If we look at one called YFI, these are DeFi assets. Aave and YFI are not beanie babies. They don't sit there and do nothing. These are technological algorithms that scour the whole area of thousands of crypto networks and assets and tokens and find ways to generate yield and generate a return. And they're so good at doing it that you can hold the token, and it's like having a digital robot that goes out there and makes money for you. And the price goes up of these assets because they're actually making money themselves. So these tokens are not beanie babies. YFI, I first talked about it when it was worth $3,000. So I was telling Jeremiah and some other people, hey, you should look at this YFI, this Yearn Finance, and you might want to hold some of it. It's $3,000 right now. Well, it's down a little bit from the crash, but it reached a recent all-time high of over $80,000 because it's owning. This is like owning. So let me step back here. The way that I view it, the Federal Reserve is who the United States government answers to. So the Federal Reserve is the top, again, of the kind of power structure, right? So the Federal Reserve is kind of the top level government in a way. Crypto networks themselves are almost like their own new countries. And then these DeFi coins and tokens and DeFi protocols and networks are basically like the next Goldman Sachs. They're the next JP Morgan. So the future isn't about countries and companies. The future is about protocols and layers of tokens. So this is why there can be a lot of FUD, is because this is complicated. This is complicated, but what I want you to walk away to understand is that Bitcoin is the base layer for tomorrow's system of money. So far, it's not as baked in and concluded yet, but Ethereum is currently the leading candidate to be at least a major base layer for tomorrow's stock markets and kind of broker dealers and financial advisors and insurance carriers, right? So Jeremiah wants to say something.
Yeah, I had a couple of thoughts, if I may.
You may.
So first, Peter, hey, Peter's here on LinkedIn. He's saying, I love the analogy, Jeff, like about, the construction. You're getting a lot of positive comments. Thanks, guys. If you guys are enjoying this, give this an applause, a celebrate, a like, whatever network you're on. Let us know you're appreciating this. Something you told me, Jeff, I got 2 points. One has to do with the psychology of the people at the top and what your perception of them is. And then the other one is something that you told me over a year ago, which when I heard that, it made Bitcoin instantly make sense to me and my wife. So what you said was, Jeremiah, imagine you owning a piece of the digital highway on which all new technology will be built on. And you own a piece of that, and there's not an infinite supply. Thanks, guys. See all the likes. That's great. But there's a finite supply, and you can own a piece of that today. And and in my head, I thought of a toll road. So I love the analogy of the land. And so I'm just trying to help our advisors here to communicate this in the simplest term possible. So you've got a 60, 70-year-old couple. They call you up tonight and they're like, what's going on with Bitcoin? Like, you told me before, buy the dip. You're like, yeah. So think about it like this. So I'm just giving you an illustration, folks, that really worked with me. And that came from Jeff's wisdom, is that imagine you're buying a piece of a highway that future infrastructure will be, built on. That was one thing that really got me. And then as I started to really think deeply about the rise and fall of empires, whether they be financial, governmental, national, corruption at the highest levels, the stock market corruption that happened there, 2008 bubble, all the movies that came out that told the story, the docs, we all know that, right? Like we're really pragmatic here. We're not saying that everybody in this country that has most money are always acting in everyone else's best interest. Forget all that, right? So if you believe that robots will act better than humanity when you have a decentralized financial network that's based off algorithms that makes best decisions based on data versus I need another 40-foot yacht, you can have that as a consideration for Bitcoin. Because can you imagine an insurance company that has no humans, no CEO, no employees that will analyze policy intake, make decisions, underwrite, issue certificates, ensure copays are being paid? I mean, that is matrix level stuff. That is what the Ethereum network is being built, and what they're leveling on top of that. So, I mean, I gave a simple analogy, then I went into the matrix, but those are two things that I wanted to just, bring to the community. It's so funny. Carrie here, I love Carrie. She's like, Jeff is now the voice in my head when people talk about Bitcoin. Yeah, absolutely. Ken is like, this is complicated, but so glad to have Jeff's expertise and guidance. So thank you guys for that. Jeff doesn't have to be here, but him and I made a commitment to this industry that until this whole industry is raised up in terms of its level of knowledge, we are going to do these firesides to really help you guys out. And we're really grateful we have this feedback. So Jeff, I just want to interject those 2 points.
Yeah, it's great. I want to say one thing about that. We were talking about like an insurance company, in place of an insurance company with your adjusters and your underwriters and your claims, all that. And if there's no people, then the first thing you would think is, well, what if some jerk tries to hack into it and refunnel everything here? And this is the fundamental breakthrough with the Bitcoin blockchain, it is virtually unhackable. It's not, so let me give you hacking 101. Hackers want a honeypot. A honeypot is a pot that has honey. It's something they can hack to get valuables, to get the loot. Okay, so when the creators of Bitcoin said, hey, here's this thing, you probably can't hack it, Bitcoin was worth a fraction of a penny. So like there was no honey in the honey pot. All right, it was just a coal pot or something, right? So like nobody was trying to hack Bitcoin when the whole network was worth nothing. Now the whole network is worth $1 trillion. And by the way, how long did it take IBM to become worth, or not IBM, but when you look at market caps of every company that has become worth 100 billion or any point, Bitcoin got there faster. Okay, let me get out of that rabbit hole. I digress. Bitcoin became worth $1 trillion. You better believe that all of the hackers of the world have been trying to get into the Bitcoin honeypot. That means right now, if a hacker could hack Bitcoin, they could get $1 trillion. There's literally no other place this is the biggest honeypot in the world. And incentives matter. Hackers are trying to hack Bitcoin like there's no tomorrow, and it still has never been hacked because for all intents and purposes, it is unhackable. The beauty of a blockchain, which there's the Bitcoin blockchain, there's the Ethereum blockchain, is you make the rules before you turn it on. And when you turn it on, you can't change the rules. This would be like if we had to make everyone follow the US Constitution. As you know, the US Constitution has some pretty good ideas in it, create a platform for massive wealth, but for the most part, we don't follow it today. The US Constitution says these are the things the government can do. Almost everything the government actually does are not in the list of the Constitution. So the Bitcoin blockchain is like a constitution that says, here's what it can do. And what it does is it uses the most powerful and secure network of computers from all around the world, tens of thousands of people volunteering their computer network power to protect it from anybody changing it. So look, I have a Tesla, it drives itself. The first time that I got into it and turned it on autopilot, I didn't trust it. It'll steer, it'll stop, it'll turn, right? And I'm like ready to take over, okay? Over time, I've noticed that it's a pretty good driver. And all of a sudden, you can trust it. So I just want to point out that it's not like we're going to, all of a sudden tomorrow be like, all insurance is covered by this robot over here. And you can turn off all the insurance companies. This is a process. It's maturing. But what we have is a fundamentally very disruptive, innovative sound technology. Okay, let's keep things moving here. Thank you. You know, again, this is new technology, so we kind of have to grasp at metaphors and analogies to try to make sense of it. And sometimes you can have,
it's like building the plane analogy while the plane is flying and be like, hey, let's try this one. Nope, something just changed. Let's throw that thing in there.
exactly. So so there's a couple of things I want to point out here, because a picture is worth 1,000 words. And I'm going to go share my screen again for just a moment. All right, so this is an interesting one. There's a quirk about the Bitcoin. It's not really a quirk. It's a feature that's designed and built in. Every 4 years, there's something that happens with Bitcoin where the inflation rate gets cut in half. So it's already digital hard money. It becomes harder money, where all of a sudden there's more scarcity. And when that event happens, it's called the halving. When the halving happens every 4 years, usually what happens is it creates a supply shock, and a few months after the halving, you kick off a raging bull market. So that happened. If you look at the first kind of cycle, and if you look at the sort of percentage gains, this blue line was the first cycle, and it usually historically does end in a bubble. Because when people are getting into something that is providing this much wealth, usually the expectation of the hype gets ahead a little bit, and there's a blow off the top, and there is a bubble. So when we ask ourselves, are we in a Bitcoin bubble? We don't want to just assume yes because the price went up a lot. We don't want to just, we don't want to assume that we're in a bubble just because the price went up, but we also don't want to assume that there's no Bitcoin bubble because Bitcoin's great and I have it and I just want it to go up. There is almost always a Bitcoin bubble. The question is, are we there yet? And the second cycle, we saw Bitcoin go from basically like $100, this is when I got in, to over $1,000, and then it crashed back down to 250. Then in the third cycle, it went from a few $1,000s all the way up to $20,000, and then it crashed back down. And now we're in the fourth cycle, where it has gone from a few $1,000s, or usually it was about $10,000 before the COVID crash, to a high of 64,000, and then back down to about 40,000, where it's at right now. So if you look, if we were to expect the pattern to match anything like the others, then we would be in a bubble that actually pops at maybe $200,000 Bitcoin, could be 300,000, hard to tell. These aren't promises. This isn't a hard prediction. This is just how to try to make sense of this new economic data. We don't have halving cycles with stocks or with gold or with any other asset class. This is new information we can use to our advantage. We can also measure, the way you measure scarcity is called a stock to flow ratio. And this thick white line is showing the stock to flow ratio price model. This is basically just saying the stock is the Bitcoin that already exists. The flow is the new Bitcoin printed up to pay miners to run the network. Look how, and then the colored line is showing the actual Bitcoin price, and the color changes based on where it is in the cycle. The cycle starts out starts out red, and then it goes all the way to blue before it cycles back to red again. So look, with all the crazy price swings, doesn't it seem like the colored dots of the real Bitcoin price seems to always be correlating back to the big, thick white line, which is the model price? This model price says we're going to be at $1 million Bitcoin by 2025.
That's funny. You say 2025, it sounds like 30 years in the future, but it's less than 4.
Exactly. So, all right, well, let's talk about some, let me see if there's any other kind of big picture stuff before we kind of talk about the practical steps that we have to really nail down before, yeah, I mean, the one other thing I'll share before we get into some like logistical steps is really just this, is
I love that one. That's like, if you guys have any amount of FOMO going on in your head right now, like, oh my goodness, Jeff is so far ahead of Jim, I already bought before I did, or like, this will be the most encouraging slide out of everything. Okay. Yeah, because if you take action, you're one of us. It's the sitting on the sidelines that'll kill you. One of my mentors, Jeff, told me there's three people in the world. There's people who watch what happens, people who make things happen, and people who say what happened.
Yeah, exactly.
So we're trying to help people be number two.
And here's the key is right now people think that they're already relegated to being the what happened person.
Right.
When really we are just starting to make things happen. When Bitcoin went from 1 penny to $1, everyone said, how much higher could it go? And I know people who had 10,000 Bitcoin and they sold at $1 and they thought they made out like a bandit. They would be a billionaire they would definitely be a centimillionaire today. Okay. When it went from $1 to $100, people went, how much higher could it go? Because they were thinking so small. When it went from $100 to $1,000, they went, how much higher could it go? When it went from 1,000 to 10,000, they went, how much higher could it go? When it went from 10,000 to 60,000, they said, how much higher can it go? And here we are at 40,000 saying, how much higher could it go? Well, the question of what drives this is adoption. And that stat that maybe something like 40% of Americans own some sort of Bitcoin. That's maybe the trees, but the forest is we're 4% of the world's population. All right. The other 96% of the world is not using Bitcoin yet. And they're actually the ones that need it the most because more of the rest of the world actually lives under much worse tyranny than we might think that we live under. Right. So bottom line, we are just now in the Rogers diffusion of innovation curve that we see here. You have innovators, early adopters, early majority, late majority, and the what happened people. Okay. Within all of that, we have just flipped over from the innovators, which are like the mad scientists in the lab that, you never see them because they're like in their garage all day and they don't have any friends, and either you don't know them or you're them and you don't know anyone else. Okay. That's the innovators. The early adopters are like people that you might know. Maybe you're an early adopter right now just being here. Okay. And the critical mass happens when the early majority flips to the late majority. And each one of these groups looks for influential people of the previous group. It was influential early adopters that started adopting by following influential innovators. And we still aren't anywhere near the early majority yet. And in reality, in most measures, I don't think we're anywhere near the early majority for the United States, and we're definitely not for the globe. So how much higher could it go? There is no limit to how high it can go because technology builds wealth and a store of value captures the wealth, where an easy money is a leak of value. So if the whole world's economy is like a bucket, we've had 50 years of a leaky bucket called fiat currency that doesn't truly capture the technological wealth that's being generated. It doesn't evenly give opportunity to that wealth. And Bitcoin is the thing that captures it and gets everybody who has access to the internet and the world the ability to all of a sudden let their bucket fill. Okay, so what we want to do now is let's talk about the 6 steps. And I want to fit as much information into this this fireside chat that we're doing here, and then we also have ways that we can take it beyond this, because this is really something to implement and integrate into your life, into your personal finances, and into your practice. This isn't something to just jump in, get some Bitcoin info, cross it off your list, and turn the TV back on. This is going to be a big part of everyone's life from this point forward. So the sooner that you act like it, and the more that we can help you act like it, the better it will be for you.
And then Jeff, I want to do a pulse check on everybody here. Thank you to all the great comments coming in. Fantastic questions coming in on Facebook group. You guys, I put the link in the chat. You can join there, see kind of the chat that's going on, the LinkedIn group. Thank you guys. Ursula, I hope you make it safe through the storm over there. Stay safe. If you guys are ready for the steps, let's see steps. Just write the word steps. Jeff and I want to see that you guys are in this. And if you just came for kind of the market update, great. We appreciate you. Thank you so much for being here. But Jeff and I want to switch the conversation to action takers. These are people who are like, okay, I love this comment here. Atafe says, I love this. My FOMO is killing me. Well, that's what we don't want to happen when you get off here. We don't want the FOMO to kill you. We want it to propel you. We want you to feel supported and that you found a community that's here to help you move forward and profit from this. So put the word steps. All right, awesome. I'm seeing this. David's there. Ursula's there. Who else is with us? Keep it up, says Russ. Very good. Still totally dialed in, says, yeah, I'm 100% leaned in. Catherine, Mary, Mike. Excellent. All right, guys, good. So we're here. So if you're still here right now, that's because you're like, okay, what are the 6 steps? How do I get myself off of zero? I don't want to be the what's happening person. I want to be the one who makes it happen. And I want to make a drastic shift in how I participate, not just intellectual armchairism, but really like, how do I use this information, right? So Jeff, I know you prepared some steps for us.
Awesome. Yeah. So there's 2 phases that you need to think about. Because everyone here, we're advisors, right? So as advisors, we want to act like we are in an airplane and the oxygen mask just came down. You know what to do, right? Put your oxygen mask on first before you try to help others. So in this realm, what you really want to do is you want to get your Bitcoin strategy together and deployed so that if you choose to then go on to the optional phase of helping others with this, then you're going to be speaking from experience and you're not going to be a hypocrite. You're going to be a believer in what you're teaching other people, right? So this is like, put your Bitcoin diamond hands on first and before you put it on for your client. So there's really 6 steps, and let's just kind of walk through these really briefly, kind of like a high level overview. So the first step is just to get off of zero. This just means get your first Bitcoin. This is because in your brain pays attention to what it thinks is relevant. The moment you go from being somebody who heard about Bitcoin to somebody who owns some amount of Bitcoin, your brain will move Bitcoin to the category of relevant, and you will all of a sudden see the stories that are happening. They'll be relevant to you. You'll be more engaged and you'll start learning more. Okay, so get off zero, and we'll go back through them and after just covering them overview real quick. Second is you need to create a strategic plan. Okay, the strategic plan is where you prepare for the FUD so that you don't accidentally sell your Bitcoin, get scared out of it from some mythological story, and where like how you're buying Bitcoin. Like this strategic plan is like your North Star. It's going to guide everything else that you do with your crypto strategy. Okay. Number 3 is you really want to set your structures up. In particular, you want to give some thought to tax deferred and tax free structures. Things like a self-directed IRA. There's specialty structures like an IRA LLC or a solo 401k if you qualify for that. What this enables you to do is buy some crypto assets with your IRA or 401k money and then defer the taxes or even eliminate the taxes. That's a really big deal. You've heard of people turning, like $1,000 into $1 million, or you've seen people turn $10,000 into $10 million. Well, not exactly. It'd be like turning $10,000 into $4 million if you live in the state of California and pay taxes on all of that, right? So you want to actually minimize your taxes so that you're not losing too much to that. Okay. 4th is you want to choose your counterparties, right? So this is where you're looking at your custodians, your brokers, where you're getting your Bitcoin, where you're storing your Bitcoin. And 5th is once you have your structures lined up, your counterparties lined up, your strategic plan is put together, you can then actually really implement it and allocate among crypto assets and diversify among crypto assets. All right. 6th, you want to then monitor, manage, and evolve. Those are the 6 steps. I'm going to walk through them in a little bit more detail. And then right after that, I'm going to tell you about how I might be able to help you walk through these in the ultimate detail where you get everything that you need, where I can hold your hand through doing this, making sure you're doing it the right way. So step 1, getting off zero, the simplest thing to do there is just open an exchange account or use an app and just put $100 into Bitcoin. Just tell your brain, this is now relevant to me. Okay, because then you're going to start noticing it. You're going to start tapping into good sources of information, just like you're doing now. You'll be doing more. And get off of zero. Just get some Bitcoin. You can open an account at Coinbase. You could download the Cash app. You could use BitBuy if you're in Canada. The point here isn't that you're perfecting anything. You're just doing something. Get off of zero. Make that flip that switch in your brain. Okay, strategic plan. This is really important. You know, there are multiple elements to a strategic plan. So, for example, when you look for your strategic plan, going through some notes here, you really want to get very clear about your investment objective. Okay, you want to get clear about what is your risk tolerance, how much risk are you willing to take, how to look at your overall financial plan portfolio holistically, what's your time horizon and exit strategy, right? So if you don't know what your exit strategy is before you get in, then you might get in the wrong structure, right? So the structure is related to the exit strategy. And then again, your tax strategy also relating to structure. Also part of your strategic plan is your portfolio construction. For that, you need to figure out your asset selection. So let's get some of these written here. Okay, so asset selection, which crypto assets am I gonna buy? Well, if I have any influence on you, it won't be the Beanie Baby ones, and it will be DeFi and Bitcoin. Once you figure out asset selection, then you need to figure out asset allocation. You know, what position size does each take? And now that's going to go back and dovetail with your risk tolerance, right? What's your risk tolerance? So asset selection, asset allocation. The next thing, another major part of your plan here is what's called OPSEC. Okay, you don't really need OPSEC when you just have a portfolio of stocks, but when you have a portfolio of crypto assets, you need it. It's called operational security, because crypto assets grow so much in value that hackers and thieves, you could get targeted if you don't have your operational security there. This is partly to help preserve your privacy and just to make sure that nobody can get to your crypto assets and that your investments aren't putting a target on your back or your family. Okay, so here you really need to look at the security of your network, right? So like just logging on to your internet like you're using Facebook, that's not good enough. If you're going to be using your internet to do a crypto transaction, you have to secure your network and you have to secure your device. OPSEC, it's a big deal. It's very important. Okay, so then you look at your tax favored structures. Again, you have things like the IRA LLC. That's where you combine a self-directed IRA with a special purpose LLC. In my other company, we set these up for people every day, all day long. What this does is it gives you something called checkbook control, where your retirement funds are literally in a bank account. You're the signer on the checkbook. And then you can open up all their holding accounts to the name of that LLC for holding crypto or anything else. For those who qualify, the solo 401k is the most powerful structure. And we operate solo401k.com. That gives you checkbook control. That gives you the ability to have a $60,000 tax deduction. If you're a solopreneur or an entrepreneur without W-2 employees, if your spouse works for you, they can contribute up to $60,000 a year. You can have Roth accounts no matter what your income level is. And you can also even borrow money out of it. So this is like a self-directed retirement account on super steroids. Okay, when you look at your counterparties, you really need to figure out, what exchanges are you going to use? What custodians are you going to use? And, maybe what brokers, if you have large orders or if you have clients have large orders, you might use an over-the-counter desk or an OTC desk. For some portion of your crypto, you're probably going to want to use a hardware wallet, in which case you actually hold some of that crypto yourself where you don't depend on anybody else, but you do need to choose your hardware wallet wisely. They would be your counterparty and trust that they're doing it right. You have hardware wallets like a Trezor or a Ledger. I think the easiest one to start with is a Trezor. So then here with your exchanges, your custodians, you got companies like Kraken, Coinbase, Gemini, Binance. Also with your counterparties, you really want to be working with advisors. I've really decided to make myself available to be the advisor to advisors for Bitcoin. So there's an opportunity for me to be your counterparty here to help you on this journey. Then it's time to allocate and diversify. And you want to allocate across, really, there's actually 4 categories. We kind of put 2 of them together, but you've basically got your digital hard money. You've got your smart contract networks. That's the layer 1 for DeFi. And then you've got the DeFi protocols and applications on top of it. Those are like the Aave or Yearn that we talked about earlier. And then you've got the Beanie Babies. And you want to be aware of those 4 categories. For me, I just cross the Beanie Babies off and focus on the other 3. And you want to guide your allocations of those according to your strategic plan, your North Star, according to the asset selection and allocation that was designed in your plan. So when it comes to monitoring, managing, and evolving, you really want to establish some data sources of the inputs. You don't want to just turn on the TV and say, CNBC, what's going on with crypto? They would be the last people you want to listen to. You don't want to just, pick a YouTube channel, some guy talking about crypto. Okay, you want to choose your data sources wisely. You want to create some sort of cadence of where you're collecting that source of information, and then you review it. Maybe it's weekly, maybe it's monthly. You want to review that research, and then you want to make adjustments to your strategy. Those would be small changes. And then when the narrative or the market theme shifts, you want to make evolutions to your strategies, which would be like big changes. So those are the 6 steps. And, I think we've packed as much of educating you about what this market is, what it's doing, where we think it's going, and then the 6-step action plan to get going with it, as we can really, fit into an hour and a half presentation. At this point, we have sort of a fork in the road where you can go out and try to do the best that you can by yourself, armed with like YouTube and Reddit or whatnot, and hope that that works out. And the benefit of that is that it's exciting, I guess. Maybe risk is exciting to some people, but it is risky. The other path is actually an offer. So if you're allergic to offers where you don't want to be told about a program or anything, then this will be the end of the webinar for you. For those of you who really do value the exchange of engaging in business and commerce and with others, and you like the exchange of value that you do with your clients, and you like to be clients of other people who exchange value with you, this is the point where you can stick around for just a minute or 2, and we'll talk about this, because we have a very simple offer for you. And it is, we actually, over the next 6 weeks, are going to be focusing on each of these steps for each of the week. And we have that through a 6-week program where there are video trainings released in a membership area for you to go through that information, and then follow it up with question and answer sessions. So we're doing that for, this is like the simplest offer ever, but I've been doing this for a while. I usually charge about $5,000 to $8,000 for it. A lot of the people who have been doing this over time, and they give this, this whole process time to work, they join my program for $5,000 to $8,000, and they maybe invest $10,000 or $100,000 or whatnot using the system. And usually they end up making millions of dollars based on the direction of using this to secure the appreciation in these markets. One thing that Jeremiah and I got together and talked about, and I'm really making this the briefest offer possible, and then I want to go open up to Q&A. I don't want to spend a lot of time on the offer, but basically we just want to do a really great offer to you. And Jeremiah was like, let's make him a great offer. And I said, let's do it for what's the lowest we could do it for, and have them be really, really serious. And what Jeremiah said was, if we don't charge them anything, they won't take it seriously, and then they won't do it. And I totally agree, because I've seen that happen before. But what he said is probably for like 4,000. And I said, could we do it even lower? Do you think they'd take it seriously for 3,000? And he said, yes. So what we've arranged is we're putting together this limited group of advisors who can pay a $29.95 fee. And over the next 6 weeks, we're going to be masterminding. Hopefully you've seen from this, that I have a deep amount of knowledge and experience here. So what I'm doing is I'm opening myself up for 6 weeks to really go deep with you and cover of these thoroughly so that you have everything that you need to take action confidently and competently and avoid all of the mistakes that could cost you $2 million instead of $3,000. So that's my 2-minute offer. Probably not a best practice, but I'm really just here to say, like, for those of you who see what we're doing, you feel the resonance, you see where this is going, and you want to make this as fast and easy as possible and simple and eliminate the chance of those regretful mistakes that can be extremely expensive, you know, that would probably make you a fit for doing this. So open up for Q&A.
Yeah, absolutely. Thank you, Jeff. So we're going to dive into your Q&A, guys. For those of you that are in that are like, yeah, like, you know, I've been watching you guys for a while. You've been diving in here and you know that you want to take this seriously and do it safely. Go ahead and write "I'm in" the Q&A box. And what I'm going to do is I put the link to join us. If you guys want to join us here, I'm just going to share my screen so you know how to get it done. We've had a few questions here. Here's what the screen looks like. Okay. So this is the screen, the Crypto Mastermind. You're just going to hop on over here. And there's actually, like, Jeff is the, you know, although Jeff is extremely intelligent, he's very chill when it comes to the offer. And, you know, I love that about him because he's really about, hey, how do we show up and help people get results? And that's where him and I are totally eye to eye. But there's a lot of things that go into this program. One thing I'm just going to share with you guys is a private members only network that's off of Facebook that you can access on your phone. Anytime you've got a question and you want to ask Jeff, like, hey, what about this? I just saw this, or you've got that fear, uncertainty, and doubt, and you need a voice of reason. That's why I originally became a client of Jeff's all this time ago. I don't know, 1, 2, 3, 4 years ago. I don't know how long it was. I remember driving the mountains of Denver, Colorado, 4 years, and I was talking to his wife, and we're like, let's do this. So, and I have found it to be worth, you know, 7 figures to me just to work with Jeff and be in that ecosystem. If that's something that, you know, appeals to you guys, great. You're going to go to this page. I put the link in the chat. It's secure.advisorist.com/crypto. You can also do a payment plan. Look, I know that, you know, I was in a position once where I wanted to invest and I didn't know how, and I really didn't have a lot to invest. I had like $1,000. So if that's where you guys are at, you can also choose to just pay this over 3 months. It's 3 payments of $1,100. You can also choose to pay with PayPal. For those of you that are in the United States, we are integrated with the PayPal processor, which means when you process through PayPal and you want to finance the membership, you can. There's a 0% interest, 0 down for 6 months. So you can profit from Bitcoin, from ETH, from any of the other portfolio allocation strategies Jeff shares. And then you can, once you make some money, you pull it out, pay off PayPal, and PayPal basically will fund your education into crypto and creating that solid framework in financial services. We're also going to include the full setup of your SD IRA or solo 401k, which is an extra $1,000 bonus on top of that. You're going to get Jeff's entire Bitcoin Accelerator course, the private forum. Jeff also subscribes to institutional grade analysis that you're not going to see in the news. You're not going to see on CNBC. You're not going to see on Squawk Box or any of those places. So if you're interested in the undiluted, the absolute essence of the truth and authoritative data without hyper noise, that's why we're making this available to this community for this short period of time. We're not going to keep this mastermind open all the time, but this is an opportunity to join us. So with that said, you guys want to hop over there, secure.advisorist.com/crypto. Welcome to all you guys that are joining. We're really excited. And I just wanted to give you a little peek of inside the mastermind. So the training materials are not in here, but we have our own private Q&As that run with members. So this is just Jeff showing up, asking all the questions. Jeff wrote what to me was an powerful thesis yesterday on the observations of the crash. Amazing conversations going on here. Like this is what's going down. Like this is what's happening in our network right now. We're already talking about this. We're way ahead of what everyone's asking. There was somebody asked a question that was already asked a long time ago, and all our members got the information. They were able to act on it. I mean, absolutely unbelievable stuff. And then Jeff and his team, if you have questions about setting up IRAs, solo 401ks, all that stuff, related to this, so you do it in a safe way, the whole team is in there. So it's absolutely brilliant. So what I'll do is I'll just leave this up here. Jeff, I know we're here to help some people. Let's see, RJ, I'm already in, but I can't remember if I have the solo 401k. Yes, you do, RJ. Just, you can get the details inside the members area. So we're really glad that you did, and glad that you're here as well. Chris, does the course work for Canadians? Yeah, as a fellow Canadian living in the United States, we actually have multiple Canadians in here. And Jeff has actually been working with them personally. Yes, it absolutely works for Canadians as well. So Chris, of course, I'm going to make it available for our Canadian friends. So great question for that. So let's dive into a little bit of Q&A here. Oh, sorry, Russ, you have a question. Will we have access to the 6 videos after the 6 weeks? Yes, Jeff and I are committed to helping the whole industry rise up. And if you need more time after the 6 weeks, yes, you'll be able to stick around. And a lot of advisors have even, to be honest, asked us, how else can we work with you? Is there a way that, we can, collaborate? And all of those are possibilities. But Jeff and I are only going to select those that are part of the mastermind. And obviously, guys, we'd love to give the information for free. But let's be honest, people who pay attention. And that's why there's a price tag, people who pay attention. We want you guys to take action with this. And we know that you will with that. So great question, Russ. Look forward to seeing you inside. Jeff, you cool with taking a few questions?
Yeah, sure.
Yeah, awesome. Okay. So let's go to, Brian. So, how do we get to purchase only domestic Bitcoins and others like Ethereum?
Yeah, so we're in a global economy, and Bitcoin trades 365, 24/7 globally. It's the first asset that has that. In fact, interestingly, because Bitcoin doesn't close, even though Bitcoin has only been around for a decade, it has more candles on the chart than NASDAQ. So in other words, there's been more trading hours with Bitcoin in 11 years because it doesn't take nights and weekends off. So I'm not sure exactly what you're asking about domestic Bitcoin. There's no such thing as a domestic Bitcoin. A Bitcoin is a Bitcoin. We were comparing earlier to gold, and gold has these properties of sound money or hard money. One of those is fungible, right? So fungible means that a Bitcoin is a Bitcoin, just like a dollar is a dollar, right? So like we don't have different types of dollars. We don't use one type of dollar if we're in Arkansas and another type of dollar if we're in Louisiana. So it's borderless. If I didn't understand your question, just follow up with a clarifying one, and I'll respond to that one too.
Great. Mary's asking, Jeff, could you repeat your analogy related to DeFi? Remember you had an analogy there about.
Yeah, well, DeFi is really just it's like the new stock market, or where, so you've got like the Federal Reserve. That's like Bitcoin. And then you've got DeFi and Ethereum and other DeFi tokens and protocols. And those are like, the New York Stock Exchange, the NASDAQ, the S&P 500, Goldman Sachs, AIG, any insurance company. Like we have all of these functions and roles in our financial system. And DeFi is intending and promising and showing promise in actually providing a whole new financial system that is decentralized. Decentralized meaning that it's all peer-to-peer networks. So then instead of when you go to buy insurance for your house, having like this many dollars going to actually manage the risk, but then this many dollars are going to those yachts and those bonuses and the commissions and all of the kind of the fat or the waste. In DeFi, there is no fat or waste because there are no yachts or bonuses. It's actually a peer-to-peer network. So to the extent that you could think about all of the waste that there might be in our centralized institutions, this is really just unlocking, as we kind of flow commerce between ourselves, unlocking the ability to just have less going to waste and more just accumulating as wealth for yourself, or even the ability to participate in philanthropy and give to good causes. So but basically DeFi is decentralized finance. So it's a very lofty goal, but it's coming along nicely. It's literally just everything else. So like if imagine if we went to a new land, we're like, all right, we got a central bank, now let's build everything else. Well, the everything else part would be DeFi. So it's a very big category. It's very, very early. And I think over the next 10 to 15 years, we're going to see it take over.
Let me drop this one. This one is definitely in your wheelhouse. It's about solo 401ks. So is it legal and possible to open up this is from Susan, a personal bank account dedicated solely to a solo 401k LLC? You put funds from your 401k bank account into the personal account, sign up with exchanges and purchase crypto for the 401k rather than creating an institutional account for the 401k with the crypto exchange. Great question, Susan.
No, you really wouldn't do that because you have to keep your personal assets titled personally. You have to keep your 401k assets titled separately. Well, the 401k, you actually don't need an LLC. Retirement accounts are a trust, so technically you just need trust accounts. And you can have trust accounts at exchanges or custodians or storage programs. And we have some of our own platforms there as well that are a little bit faster than just going to other exchanges. But by keeping them segregated, that's what preserves the tax benefits there. And the real question is, why would you want a personal account instead of an institutional exchange account? With the institutional account, you're going to have higher level tools, professional level tools, maybe in some cases higher level support. So you actually want those institutional accounts, but what you need is to know how to open them and know how to work with them. And that's where we'll help you there on when we talk about counterparties here. These counterparties, we want to talk about how do we pick which counterparties are the easiest to deal with when we're opening accounts in the name of a trust. And we cover that on week number 4.
So closely related to that, Russ is asking, because in Canada, the terms for the retirement plans are different. So he wants to know in the mastermind, is there going to be discussion about RSPs and TFSAs, or maybe trust concepts that can be used in Canada in the same way it's used in the US?
Yeah, I'm looking for Canadian experts on that front. Unfortunately, there just hasn't been that much demand. I mean, the Canadian population is so much less than the US population. If you spend $5 million on research and development for like 2 guys and a moose, no offense, then it's not.
Hey,
it's
there's
not
more
good.
than moose in Canada, okay?
I know.
And there's 5 of us,
grizzlies,
not 2.
5 plus a grizzly. No, but all jokes aside, this is just an area where literally just due to the lower population, lower demand, some of these specialized strategies are not something, there's not something we've gotten a lot of demand for, and we're looking for experts that know how to navigate that. As soon as I find anyone, we'll kind of bring them into the fold here, but don't let that stop you. I mean, from taking these steps. If some of the structures we talk about are specific to Americans, then it doesn't really matter because the asset itself is global. And the more Canadians that we get in the group, the more demand we'll have to take to try to find somebody that might be experts on those type of accounts.
Appreciate that. So here's one that I think is timely. This still speaks to some of the doubt that's out there and some of the stories. So Larry's asking, how do we know Bitcoin's not a Ponzi scheme, considering that this is an asset class or an investment?
Yeah, so a Ponzi scheme is actually something where the profits are generated by always needing to have more and more people come in. And Ponzi schemes are essentially marked by the fact that they are unsustainable. So if you really study Ponzi schemes and what makes something unsustainable versus sustainable, what you find is that easy money or fiat money is more like a Ponzi scheme. So, for example, there's never been a point where everyone in the world just went, forget about gold, and then gold went to zero. So in order for a Ponzi scheme to collapse, you have to have a total withdrawal of everybody's involvement and support because there was nothing to it in the first place, right? Well, there is something to money, like humans want money. So Bitcoin is a money. There is something to a money that doesn't close on nights and weekends. Humans want money that is open 24/7. There is something to money that's capped at 21 million. Humans want money that stores value. So what what the sustainability of Bitcoin is made out of is the demand for Bitcoin, right? So now some portion of people are treating Bitcoin like a beanie baby, and they get in and then they get out when there's a FUD story. But you don't see Bitcoin crashing back down to 1 penny. You know, it goes up 10,000% and then crashes down 80%, and then it goes up 10,000% and crashes down 80%. You don't really have to be a complex mathematician to realize that you can afford to give back 80% if you got 10,000% first, and you would want to repeat that process as many times as you could, please and thank you, right? So, you know, the Ponzi scheme is when there's nothing to it, right? So what backs Bitcoin? What backs Bitcoin is the most powerful computer system in the world, the most secure computer system in the world, and the most provably scarce asset in the world. What do we have on those areas with the dollar? Okay, is the dollar the most powerful computer system in the world? No, it's a cobbled together system of, like, we don't even know how many dollars there are. How good of a computer system is that? Also, every year, the banks that hold dollars get hacked, so they really don't have a security architecture that can compare to Bitcoin. Also, over 40% of dollars in existence were just printed over the past year. So there's no scarcity to the dollar. The dollar has unlimited money printing ability, which means it has unlimited ability to crash down to zero, just like a Ponzi scheme. So all in all, if you're trying to make heads or tails of what may or may not be a Ponzi, the dollar may be a Ponzi, and Bitcoin is provably not a Ponzi.
Love that. Appreciate that very clear explanation. All right, let's take one more here. All right, here's David. If someone hasn't already asked, why is, I think he means Shiba Inu,
Yep.
so the Dogecoin climbing like it is, and why is it all over the internet?
Yeah, so, you know, there is actually a separate coin from Dogecoin called Shiba Inu. And anybody can create a cryptocurrency, okay? When it starts out with a market cap of nothing. And then they find, you know, unsophisticated investors and they tell them a story. It's basically a con. So a lot of the Beanie Baby coins are cons in that it's just somebody creates a cryptocurrency, tells someone it's a story about how great it is, and then because it's not worth anything to begin with, as soon as people start putting money in it, the line on the chart instantly goes up. It's just like penny stocks. So these are pump and dump schemes. They fall in the Beanie Babies category. Stay away from them unless you're mad at your money.
All right, Jeff, thank you so much. Really appreciate you being here. And of course, all the advice you keep sharing with the advisor community. It's really appreciated. Guys, if you're appreciative and grateful, just, say thank you. Give a shout out to our man, Jeff, here whether on YouTube, LinkedIn, give us a like and applaud, Facebook. We enjoy doing this. We love coming here and just adding value to the community. It's helping you guys be better advisors. We also want to give a special welcome to all of you who join us that are in the mastermind, and those of you already part of the mastermind. Don't forget, tomorrow we have our private Q&A with Jeff tomorrow at 1:00 Eastern. So that's for members only. And that's just your questions answered. We're going to go even deeper. And there's some things that obviously we're not going to talk about here that you're definitely going to want to lean into. So make sure you get there. And if you want Jeff to handle your questions in advance, be sure to go to the members area and ask your questions today and tomorrow morning. And then Jeff will hit them up. And of course, you want to show up live. We're going to help you guys have those breakthroughs, especially with all the craziness going on. I'm really grateful that we have this mastermind to help advisors who are serious. So with that said, Jeff, any final words of encouragement for the community out there?
Yeah, I would just say the encouragement is that however you feel about looking back and seeing that you could have bought Bitcoin for $100 7 or 8 years ago, or that you could have bought Bitcoin for $1,000 6 or 7 years ago, or that you could have bought Bitcoin for $10 like 9 years ago, or that you could have bought Bitcoin for $4,000 1 year ago. In the future, you're going to look back and see that you could have bought Bitcoin for $40,000. And one concept we talk about a lot in the 6-week course is that it's actually not even about a whole Bitcoin. A whole Bitcoin, when you own one Bitcoin, you actually own 100 million fractions of a Bitcoin called a Satoshi. And that's what really matters, okay? Just even getting yourself one whole Bitcoin really potentially stands to become, like, let's say you have a $500,000 net worth and you put 10% of it in Bitcoin today. There's real potential for that one Bitcoin to become worth far more than everything else you own combined. That's what's happened to everyone who has bought Bitcoin and had the fortitude to hold it over multiple year period of time. Personally, I'm holding my Bitcoin forever. I plan on lending it out and earning interest, and every Bitcoin that I own will be making me $70,000 to $100,000 a year, several years down the road, as I expect it. So it's really important that you understand that we're in a moment in time where there's a trend, and the trend might hurt your brain or break your brain to try to think about it for a moment, because it's just like, why would I be doing this? Number one, you can own a fraction of a Bitcoin, but if you follow these 6 steps, you can get whatever fraction of a Bitcoin, whatever numbers of Bitcoins that is appropriate for your risk tolerance as you craft your strategy. And if you go 5 years from now, you're either going to be looking back on this period of time and saying, oh, what happened? Shoulda, woulda, coulda. Or you may, and I strongly believe you would be, if you use these 6 steps, looking back on this moment and saying, I don't care what other people think about me. I don't care what they're saying on TV. I want the facts and the truth. And if the facts and the truth are unpopular, and if I have to feel uncomfortable to take action with this opportunity, but if that's what it takes to secure the opportunity, I'm willing to do that. And that's what this opportunity is. So hopefully I've presented the opportunity clearly enough for you. At this point, when it just crashed down 50% in the past week or two, some part of you is like probably going, this is crazy. This sounds interesting, but I don't know, or whatever. There is a leap that you have to take to be able to adopt something that you don't fully understand yet. And some of you are going to take that leap. And for those of you, I really look forward to working with you. And some of you won't, and that's okay. But I want you to really think carefully about it. And if you feel a little bit like, whew, I don't know about this, that's natural. That's the same way you felt about Amazon in 1999. But what did you do about Amazon in 1999? What did you do about Bitcoin in 2021 will be what your future self asks your present self. So hopefully I'll help you do what you may think is the right thing in retrospect in the years to come. And if so, look forward to helping you do that.
Thank you so much, Jeff. And thank you for being here, everybody. The link again is secure.advisors.com/crypto. We dropped it in the chat. It's right there. You can go ahead and click on the link and join us. For you members, we'll see you guys tomorrow at 1 Eastern. And for everyone else, be well and don't be scared. Get profitable, get excited, and take action on what we shared today. Thanks, everybody. On behalf of the whole team here at Advisors Worldwide, we appreciate you guys. We'll see you on the next class.